Welcome back to Market on Close. Let's talk some commodity swings with Mr. Phil Streible, Chief Market Strategist at Blue Line Futures. We'll begin our Friday chat there. Great to have you, Phil, as always. What's going on, man?
Oh, man, thanks for having me on. And Kevin reminding us of that early August sell-off in the S&P. I pulled up that chart, man. That was some dark times there. you want the mind of the trader, that new program you have. We got to see how that person was handling that kind of sell-off, because that was brutal,
exactly.
You know?
Yeah, that's a rare event that we came through. I mean, pretty amazing. It's kind of a victorious month when you think about it that way.
Yeah, it has. And we've had a great snapback. I mean, I am definitely focused on that S&P 500, seeing if we're going to squeak out a new high into the close. A lot of times we get this month-end markup, and I think that's what we were really seeing yesterday before it seemed like they pulled a rug out of it. Some big traders came in, bought that market up, and then they stepped away, and it was like they let the gas, the foot off the gas, and that's when we sold off yesterday. So today it's pretty light volume action. Everyone's looking at all that labor data next week. There's just a ton of it front loaded in. So I think that next week is what cements, the Fed, whether they're going to do 25 or 50, and then we'll see what happens from there.
Okay. We'll see if we can finish near the highs rather than the lows. That would be nice. Crude oil, though, man, it's just like always sell it every time it rallies. Can't seem to stage anything sustainable.
So, the reality is if you do look at crude oil, it's made a series of lower highs all the way since July. The rallies have been somewhat of a dud, and it's been a reoccurring theme on heightened geopolitical risks. You had some discussion that, Libya was going to have a problem exporting some crude oil. That was that snapback rally we saw yesterday. But a lot of times, you got to look at these markets. Position sizing is key. They got 100-barrel contracts, so you could scale in, scale out. If you got that rally yesterday and you were feeling really good about it and you felt like you were back to break even, say, mind of a trader, take some of those positions off. Don't be so greedy, because you get some things turning around today, like OPEC supposedly coming out and saying that they're going to increase that output at that next meeting. You get a big sell-off there, and it looks like prices are going to, probably travel back down, probably another buck, 72.50 down to those recent lows, $71.
You think we generally can kind of explain that away with some of the geopolitical premium unwinding, supply? We don't have to look at a crude oil near the lows as like a bad economic message?
Yeah. Oh, I mean, economically, things do slow down after the first interest rate cut, because the people have been getting 5% on their money, and all of a sudden they get hit in the head with a 2x4. They're getting a little bit less on a monthly income. So they tend to tighten up the belt, and then lenders look at it like, hey, the Fed's cutting rates. That's not necessarily a sign of a boom. They got to be cutting rates for some particular reason. So they starting to tighten up their lending standards and practices. So it does. Initially, that first interest rate cut does have a slowdown in the economy. I think that does weigh in on the crude oil market. I mean, I live in a vacation area, and coming into a Labor Day weekend, there's hardly anybody there. There's no one on the beach whatsoever. So I think people are really starting to feel a little bit of pressure and tightening things up. And that early August sell-off in the equity markets was probably the wake-up call.
Well, at least you get a quiet beach to yourself. Right? Kind of a win-win for you. Either the local economy or the... Yeah.
There's June grass, so I can't fish out there. I cast it out once today when I saw a bunch go by, and I reeled in a bunch of big green mess, and I'm like, I'm out.
Hopefully your trading's going a little bit better.
Yeah, right.
What about crypto? You watching Bitcoin just continue to fail every rally, Phil? What's up?
So we had some people that were working GTC orders at 65,000 that were filled 4 or 5 days ago, right away on I think it was Monday or so. And I was like, holy cow, it's up that high. And then as the days progressed, it just seems to continue to disappoint. We come back to this 200-day moving average, 59,371 on the September contract. It doesn't have anything. It's actually becoming more of a viable asset because of the fact that the volatility in a certain degree is not as great. We're only moving about $3,000 a day. But the reality is you start questioning, what is its purpose again? Because if you can't generate alpha in it, what is it good for?
Love it. It seems like right now, not a ton. Gold, though, slipped 2 this week. Feels like gold didn't like the spike in yields today.
No, the spike in yields also came out of nowhere, so that was a bit surprising. I think 2506 is kind of like a critical level on the gold market. Psychological support 2500. You're kind of where it goes back into neutral territory is if it closes below 2584. Really disappointed we couldn't break out to the upside, but we didn't have, there was no gasoline this week to really send it in that direction. We did see a sell-off in silver a couple times this week. Also, copper futures kind of coming back down again. So there's a number of components on the metal side that are weighing in on that gold market. But remember, gold really is a currency. It's not necessarily a commodity. People buy and hold it. Central banks hold it. So it will serve its purpose, and it's done great so far. But we need a little bit more. I think next week is going to be that telltale sign if we're breaking back out.
All right. Some things left unsolved this week, chart-wise, technically. So that means it's just a stress-filled weekend. I'm just going to be thinking about the charts over and over. No, we'll be enjoying it. Enjoy your holiday, Phil.
Yeah, you take care.
I wasn't joking. We'll just be thinking about the charts over and over, sadly. All right. When we come back, we got a good